Welcome back, traders. It's going to be a packed week of central bank meetings. The Fed, the European Central Bank, and the Bank of Japan will be among key central banks to decide interest rates in the second half of this week. Those decisions are coming at a time when the Middle East crisis is threatening another inflation resurgence for the first time since the post-COVID period. Well, given that there are more questions than answers on the geopolitical front, policymakers may refrain from any policy changes, but updated economic forecasts and perhaps the communication through policy statements may reveal whether policymakers are concerned about inflation risks or whether they pay more attention to growth risks. So that could cause volatility in global markets. So in this video, I'm going to focus on dollar yen, euro dollar, and gold. So let's have a look at what the technical signals suggest about those assets. And starting first with gold, well, the precious metal has been a weaker safe haven asset lately as higher oil prices helped the US dollar to strengthen. Treasury yields also strengthened, so that added extra pressure on the precious metal. And since the talk now is shifting towards monetary policy, investors would like to know whether the Fed is still willing to cut interest rates. Of course, Powell has been rejecting that case, particularly for near-term rate cuts. But let's see if that communication remains in play. If Powell who is facing legal battles from White House decides to play down rate cut expectations, that could add some extra pressure on the precious metal. We can see that the 50-day moving average is currently balancing downside movements near 4,950. So hawkish communication from the Fed, if for example the dot plot shows higher expectations of steady interest rates or perhaps a rate hike in the horizon, that could push the precious metal lower. So in this case, the 4,850 number could be next tested, and if it fails to hold, then the decline may stretch towards the 4,650 level, where this tentative support trend line coming from the lows of October 2025 is placed. Now, in the event that policymakers shall retain hopes of rate cuts, if they pay more attention on growth risks, then perhaps the precious metal may gain some momentum. And in this case, I would like to see a clear close above the 5,118 and 5,200 level, which was a tough barrier last week, in order to target this tentative resistance trend line near 5,320. Then beyond that, I expect another test near the March high, near 5,420, before we move back towards the January's peak of 5,597. Now looking at USDJPY, while the Bank of Japan is also expected to decide on interest rates later this week, there are no expectations of any changes in interest rates. So again, policymakers here may retain a neutral stance, but given that rate hike expectations haven't actually changed despite the Middle East crisis, it will be quite interesting to see if indeed the central bank is still willing to raise interest rates in April or in June the soonest. So if the central bank provides a hawkish message, that could help the yen. And in this case, we may see an extended pullback below the 159 level and probably towards the 157.60 and 158 region, where the 20-day moving average and this former constraining trend line is placed. Below that, if the 50-day moving average gives way, then the attention will turn to the 155.60 territory. While lower than that, I expect some consolidation near 154.60, where the price pivoted a couple of times since December before targeting before a sharper decline takes place towards the 152.55 territory. And we can see that the 200-day moving average is also approaching that zone, which includes a key ascending trend line coming from April 2025. Now, if the central bank provides no clues about the timing of its next rate hike, And if it indeed shows some concerns about economic growth, given that Japan's economy is sensitive to energy prices, then perhaps dollar yen may continue higher, unless of course Japanese officials intervene to save the yen through FX intervention. But as we all know, historically, FX intervention actions have only a limited impact. So if dollar yen moves lower because of some intervention, that may not be a sustainable move, and perhaps the price may soon reverse to target again the 161.20 region, where this tentative ascending line is placed. Slightly above that, the 2024 high 162 could be also considered in the event of an extended increase, and then the 163.50 region could be the next target on the upside. And now looking at euro dollar, the ECB is also scheduled to announce its rate decision. There are no expectations of investors don't expect any changes in interest rates, but obviously updated economic forecasts could provide some direction on whether policymakers are indeed concerned about inflation risks. Before the Middle East crisis, the ECB had achieved its inflation target, but since inflation risks are now back on the spotlight, it will be interesting to see if the ECB will put all options on the table, including a potential rate hike. So if it sounds more hawkish, if expectations change towards rate hikes, we may see that rebound extending higher. And as we can see, that rebound happens just around the low from July 2025. So it's considered an important support region. And if that recovery continues, then the price may head towards the 1.5090, 1.6030 territory, where the 23.6% Fibonacci retracement level of this outlook over here from 2025 is located. Successful penetration higher may then target the 1.1715 region, as there are a couple of trend lines passing through this territory, and the 50-day moving average is also here. So a successful penetration above that may confirm another bullish action, probably towards the 1.1820 territory. Now, if the central bank appears more dovish, if it sounds more concerned about the economic outlook, then suggesting that interest rates could remain steady and perhaps further rate cuts may not be excluded, then in this case we may see a pullback, and the close below 1.14 could take us as low as 1.12 or 1.1280. While lower than that, I would pay attention to the 50% Fibonacci retracement level of this outlook at 1.1125. So, and something, an additional thing that we should keep a close eye on is that the technical indicators down here are hovering near oversold territory. So that suggests that from a technical perspective, a rebound is still likely, but perhaps hawkish communication is also necessary for euro dollar to continue higher. And obviously, the Fed policy meeting may also affect this market. So keep a close eye on upcoming central bank meetings. We'll have more technical updates on Thursday, so stay tuned, and we'll be back with more technical information. So thank you for watching, and see you next time. Bye bye for now.